So, I want to talk a little bit today about what is going on in the stock market today. And the reason why I want to do this right now is because it's before the market has opened. So, what I want to do is I want to talk about the numbers that are going to come out, what that's going to mean for the market, and what are we going to see happen today. Here's the thing. The stock market is going to do what it's going to do, but what we're waiting on is the inflation numbers. And the inflation numbers are incredibly important because that's going to tell us exactly how much money, how the interest rates are going to go and how much money it's going to cost to borrow, right? And that's going to change a lot of the way that people invest, right? That's the story of 2022 really, is inflation, interest rates, cost of capital, right? Those are the three things that have been really driving this market this year. And so this inflation number is incredibly important. Now, here's the thing. We're hoping for an inflation rate of 7.3% headline, right? Which is historically very, very high. But it would be much, much lower than what we've seen in the recent past. And so what we're hoping for is to see that number. Now, the market is very much expecting that number, right? Yesterday, my portfolio personally went up like 3%, which is an insane amount. And that has me worried, right? It's very, very possible. I'm not saying that this is going to happen, but I'm saying it's very, very possible that even if we hit the number that we're hoping to hit, the market will go down, right? Because we've seen this incredible rise in prices in the market recently. The lower inflation rate has already been priced into this market. And that is an incredibly stressful thing to do because if we come up above, the market's going to go down. If we hit the number, the market might go down. And if we're well underneath the number, the market might not do anything, right? The market has already priced these numbers in. And so we're in a very precarious situation today. And here's the thing. I don't know what the market's going to do. I really, really don't. The market could do just about anything over the next 24 hours. Even worse, the market could do crazy things, right, over the next 24 hours. I don't actually even know what the market's going to do this week, this month, or this year, right? It could be a very, very difficult year still. Very challenging because the market's going to act in ways that you didn't expect it to react to certain given pieces of information. And that's all fine, right? Because what I want to talk to you today about is not about predicting what the market is going to do, but rather the system that I use to make investment decisions. It's a very, very simple system. And I've got it sitting right next to me, and I'm going to share it with you in a second. But the important thing here is that as value investors, what you want to do is you want to search for value. And how do you do that? You read annual reports, you look at the financial statements, and you come to some sort of judgment about what the issue, the stock is worth, right? So that's the method that I use. I read the annual reports, I look at all that sort of stuff. And what I do next is I take this little notebook. It's an unassuming little black hardbound journal, right? That I picked up for 10, 15 bucks, whatever, right? And what I do is I have it open with me while I'm reading through the annual reports, and I just make little notes. As I'm reading through the annual report, I just make little notes about it, uh, what my thoughts are, all that sort of stuff, right? That's what goes into this journal, right? And basically what I'm doing is I'm just trying to reason through what this company is doing, what challenges it face it, what's going on in its business, right? That is the basic idea of what I'm doing. And that gives me a sense of what the value is going to be, right? And I'll estimate value through, say, a discounted cash flow model, and what I'm willing to pay through a similar model, but maybe I'm not looking necessarily for fair value. I might be looking for an unfair value, an unfair advantage to that stock, right? And this little book right here, it's going to have all kinds of information in it. And then I'll probably, if I like the stock, I'll probably figure out how much I'm willing to pay personally for it. And then I'll put in a good to cancel order for that amount. Great. All said and good, all is good and well. Then, when my order gets filled, I move to this book. Now, it's much, much smaller, right? This book right here, also hardbound, little journal, picked it up for like $5. This one, I record the date of my transaction and I record the reasons from this book that led me to actually make a purchase and why I chose to actually purchase a particular stock or issue. And then these two books right here, they keep me from doing something foolish, right? That's the entire point of this system, right? Is to keep you from doing something foolish. The decision book right here, its primary job is to write down your thesis, right? Why are you buying this stock? And then when you want to go and if you're getting angry or scared or whatever, the purpose of this book is to go back and read it and to see, like, is your thesis still valid, right? And if it's not valid, you sell. If it is valid, you hold. It's that simple, right? This book right here, the big one for the in-depth research, what you want to do with that one is it serves a very similar purpose. However, you can make assumptions, you can write down all sorts of things in it. And this little book right there, the bigger one, it's about recording thoughts, assumptions, and things that you like about the stock, things that you don't like about it, all of that sort of stuff, right? And then what it's for is when you get your next annual report, you go through and you read through that annual report, you make your notes, and then you can make comparisons across time, right? Like in 2020, it looked like this. In 2021, it looked like that. In 2022, it looked like this. Is it moving in the right direction? And that gives you a sense of continuity. And so when you go and look in your decision book, you can say, is the thesis actually playing out the way that I want it to? And if it's not, then you can reevaluate, right? Well, why isn't it happening the way I thought that it would? What's going on? And so that gives you sort of a longer term idea of how the stock is playing out. And this is a system that I personally use to make investment decisions, right? Um, and it's way, way less stressful, quite frankly, than sitting there trying to make trades or look at, you know, a chart to figure out what's going on. I just read through my notes. That's it, right? Like, and then I go, well, I bought this stock 2 years ago when it's kind of sucking, and I look at my thing and I go, wow, my thesis didn't play out. Maybe I should get rid of this thing, right? And that's the purpose of my dual book system. And so I like it. It works for me. I think it might work for you too, and it helps you stay rational, which is the most important thing when you're doing any sort of investing, right? And whether or not I perform or I underperform or outperform the index is immaterial to me, because I just want to own good businesses. I don't really care, right? I don't need to benchmark against the S&P. Uh, Nobody is really tracking my performance. Um, it's not like I have investors that I need to keep happy. I just need to keep myself happy. And this system really works for that. So, anyway, and it really sort of keeps a lot of the noise out of the conversation. Noise about inflation, interest rates, the macroeconomy. It all just falls to the side, and you're just looking at businesses and how is my businesses doing, right? How are my businesses doing? And are they performing the way that I want them to as an owner? And granted, I'm small. The way that I express my disapproval is I walk away from the business, I sell it, right? I can't really make strategic management level decisions. I just don't own enough of the company to do that. But if I'm happy with the company and I'm happy with the way that it's going, these things really keep me on track. So that's what I had to share with you today, is my little dual book system for making investment decisions, because I think that is far, far, far and away more important than anything that you'll see in terms of inflation or macroeconomics. And that's coming from an economist. All right, that's all that I have for you today. Until next time, I want you to stay rational.